What's going on out there, good people? It is your boy Look Around with LMD Trading, coming at you again today with another review for a green day. Today was an interesting day going into the market at the open. Wasn't really sure what to expect. Kind of thought it was going to be a sit on your hands type of day, but actually turned out to not be so bad. Wasn't as bad as I thought it was going to be. So we'll do the usual review, how we usually review it, looking at trader view, and then going back looking at the charts in Thinkorswim. And then on this one, I actually have a little bonus footage at the end of the review. I recorded this morning as I was building my watch list. So for one of the trades, I'll go ahead and put that little snippet in there, just showing me kind of walking myself through the chart. And then later on that afternoon, as we were managing a couple of contracts out, I just turned on the camera and kind of recorded managing those trades out. So I think that's be a little interesting for people to kind of see how I manage and talk my way through these trades. So without any further ado, we will go ahead, get trader view pulled up, look at what we did, see what our profits were for the day, and then we'll look at those trades inside of Thinkorswim. So let me get trader view pulled up and we'll get rocking and rolling. All right, so we got trader view pulled up here. I'll scroll down. We did trade quite a bit more than the usual that we trade. You see we traded a total of 16 trades today. Volume was 52, so fairly heavily traded day with a closed P&L of 222. This closed P&L, that's a good day. Like I said, my goal every day is to make $100 within this account. So we doubled our goal, but that number should have technically probably should have been over $300. And as we do a quick review of these here, I'll kind of tell you why and how. So you see, we took a couple of full stop outs, scalped a few trades, got out on a flat one. MRNA was a real nice trade. That one popped real quick. Actually got 4-to-1 on our risk to reward. JPM, we took some solid hits on. That one there was actually 3 contracts that we were in, and took an extra hit. Chevron, CVX, we took some hits on that one. This one here, when I get to it, we'll discuss it and we'll see why I say it should have been a better day today. But we'll go ahead and get started with the first one in Thinkorswim. So I'm going to go ahead and get Thinkorswim pulled up with our charts, and we'll get reviewing. All right, so we have Thinkorswim pulled up. Like I said, this is just a workspace that I built just for reviewing our trades. We got our daily ideas here. We didn't trade everything on there. Usually we'll never trade everything that's on the ideas. Those are just to see what they're doing. Got our call side of the watch list and our put sides. And I did, usually when I'm in trades in the daytime, this is set to P&L open because I want to see what the trades are doing when they're open. But after the market is closed, I figure, and we're doing the reviews, I'll put what the daily P&L was, so we can see on each contract what we made. So I think that's some valuable information. So that's why we went on and put that. And like I said, we see TSM, we did good on TSM today, but That should have been so much more. So let's go ahead and get started. First trade that we took this morning, 4 minutes off the open. That's getting into a trade kind of quick. That was NVAX. And this was a put play. Got in it for it to go down. As we know, puts are playing it to go down. Let me go ahead and get the charts kind of set up how I like them. Just making it a little easier to see them, see what we were doing. So this here again was a put play. We were getting in at 9:34 and 56 seconds, so almost 9:35. We were getting in pretty much right there. And again, this was a put play. That early in the market, no real reason to be taking that trade. We see no pattern there. If anything, this thing should be running like it's doing. It actually kind of flagged out right there on the next candle, which would have been, if it's flagging up, it is going to break up. And that's exactly what it did. We got out of that trade at 9:43. So we got out on this candle right here, and that stopped us out. So stopped us out right there, playing a put. Again, I see no reason why we should have even been taking that trade. So started off red, 25 bucks out the gate. Next trade that we got in was MRNA. MRNA was a call play. And I don't even think that I had this initially on my list. I sit in a chat room, Relentless Trader. If you follow him on YouTube, I usually sit in his chat room in the mornings, just kind of listening. We trade totally different strategies, but I do kind of just enjoy sitting in there listening as he's taking his trades, and then just typing in the actual chat room. But I think somebody had mentioned this, typing it in the chat room. So pulled it up, looked at the chart, kind of like what I saw, and took a trade. So let's see what it is. See if it was something that was valid to really be looking at. So we got in this trade at 9:41. So let's see. We were getting in on this candle right here, and we got out of the trade at 9:44. That was a very quick pop. We got out right there. So stock opened, it pulled back right to VWAP. And we had a color change on this one. So it pulled back, had a color change. We got in when it broke that candle. So when it broke that candle, we got in, and first target area was going to be right here in this area. And we got out of that trade right as it was reaching that area. And we made $100 on that quick move on one contract. Moderna contracts are a little more expensive. Let's see, where are we at on the call side? So I don't even have it on here anymore. So I must have just dropped that one in the active trader, because it's not even on my call watch list. But that one moved real quick. Like I said, in those contracts, that one we paid $410. So we paid $410 for the contract, and we sold it for $510 to make that $100. So like I said, these contracts are a little more expensive. On moves down, again, It's going to be a little more expensive on the hit if you take one, unless you kind of shorten your stop up, kind of tighten the stop up so you don't take that big hit if it moves. But that was a good trade there. And as you can see, it kind of just broke this area and then rolled over. So that was a real good in and out trade for a quick $100 pop. And wasn't even in the market 10 minutes. Next trade that we took was JPM. JPM we took a beating on today. This was one of those stocks where just felt gotta be right on this trade. I gotta make some money on it. And it just did not happen. Let's see if they were valid trades. So the first one we got in, 951. We would have been getting in on this candle right here. Boom. And actually, I bought a new keyboard and mouse set. And I really do not like this mouse. So I'm going to be returning this back to Amazon quickly. And we got out of this at 9:58, so we'll put that candle that got us out. This was a call play. We got out at 9:58. Interesting, because we took a $22 loss on this, so almost a full R loss. Not really. Definitely should not. I'm not going to even say not really seeing anything. Stock opened here, pulled back, came back here, setting a new lower high, because this was the high at open. It set a new lower high. Came back. Now it did set a higher low from here, but this is still not a reason to get in, because we still going to run into this resistance over here that we didn't break. So we got in right here. Again, if I look at this, I would say real time, I'm looking at this, seeing it's breaking the VWAP and it's breaking this area of support and resistance. But we're going to run into this resistance and we're going to run into that resistance. So look at what it did. It hit it, it popped, it ran into that resistance, never even really made it up to that resistance, and we stopped out right there. Pulled back, kind of just chugged along, came back up, again, testing this area of resistance. That was the high of the day right there. It was done. So we took a almost full R loss on that one, $22. So the next trade that we got in was the SPY. And this was a call play on the SPY. Let me stretch that out. So this was a call play on the SPY. Got in at 9:53. So we got in on that candle right there. And we got out of this at 9:57 was one contract, and 9:58 was the next one. So let's see. If we look at this one, opened here, kind of pulled up, small pullback, came up, top and tail, pull back. Again, that top and tail is going to act as resistance. So this wasn't really a real solid trade to get in. But we got in right here as it was probably breaking the high of that candle. Made this move up. And then we kind of saw when it threw that red candle, we got out one contract. And we got out of both contracts at the same price. They were just out about a minute and a half apart from each other, which is interesting. Um, so first one we got out for a $15 profit. We saw that that next one wasn't going to do nothing, so we sold it. And then you see what the stock did. It just rolled over. And we got $30 out of that trade because that was the only trade that we took on the SPY today. So at that point, we are still green. And what were we green? About $90 at that point in time. So next, we took a put on TSM. So let's see, we got in TSM at 10:01. So we got in that one right here, playing a put on a stock that was running. Interesting. Got out of that at 10:08. So we got out here as it's still running. Again, the stock is moving. Why are you trying to play it to go down? Other than thinking that it was kind of extended and it was rolling over as opposed to a sharp pullback. But no reason to get in that trade. Like I said, probably was thinking it was going to kind of roll back over just based on how the market had been acting. Anticipation will cost you money. I kind of say that quite often. But we saw the error in our ways, saw this thing kind of moving on up, and we ended up getting out. Didn't take the full hit on it. We just got out of it, took a $10 hit, and that was that contract right there. So we took that $10 hit on that contract and kept on pushing. Keeping track with the numbers in my head. So at that time, we were up about $80. And we come along and we trade CVX. CVX. This was a call play. And we got in at 10:03. It's another one that was running pretty good. Kind of caught it late because we were taking some other trades. But look at that move. No real place to get in that though. Looking at this. This is a nice move, but there's really nothing visible that's saying take a trade. There's nothing. It just ran. So we got in that one right there. This thing is already kind of extended, kind of away from the VWAP, volume weighted average. It did kind of break and almost like a small flag, kind of consolidated over, and then it broke. The area to get in would have been right here as it tested and then took off. So we got in a little late. We got out of that one at 10:11. So we got out right here. Possibly thinking that it's extended. Saw a little selling pressure in there. And instead of waiting to see a pullback, we just ended up getting out of it. It had about 50 cents left in the move. And what was that one at? That was at 40 on the delta. So 50 cents. That probably was another maybe $20 left in that move. But we did get out of this particular trade for a $10 gain. So that would have had us up about $90 on the day. Next trade that we took was NVDA. NVDA. And that was a call trade. Got in at 10:07. So we were getting in that trade right there, and we got out at 10.13. So we were getting out on this candle right here, breaking back down. So not really a good area to get in, just looking at the chart. Made this move, broke that area of resistance, came up, broke this area of resistance. We would have wanted to see that pull back to here and hold. Definitely didn't want to see it pull all the way back down and then come back up, because that was a pretty strong move that the buyers had to make. They needed to get a little rest. But we did get in right there. Stock just kind of pushed right along that area. And then we got out on this red candle again, anticipating it to break down. In this trade, we got out flat. We got out flat on this trade for $1. So pretty much made commissions back, because in TD Ameritrade, when trading options, they do charge you a commission. It's like 65 cents each way. So 65 cents on the buy side, 65 cents on the sell side. So pretty much getting out, paying those commissions on that trade right there. So we'll go ahead, check our next trade out, which was TCM. And TCM was a call play. And let's see, we got in this one at wrong chart. Got in this one at 10.09. So now, like I say, after we had took this put play, like what were you thinking taking a put play? We got in right here. So right after it kind of came over, kind of consolidated, nice little breakout move. We got in right on the breakout. First contract we got out of 10.14. So on that candle, and then the next candle we got out 10.17, which is right there. I'm gonna kind of bring this over a little bit. So took the trade on the breakout. Good trade. That there, I would say, was a good trade, because getting out right at the breakout. And definitely left money on the table on this trade. But we did kind of see this red candle here. Got out for a $69 gain on this trade. So well above our 2-to-1. But we probably could have made another $50 easy on that move headed up to that area of resistance. So now is where we're going to get into seeing how I'm saying that this could have easily been a 3. And this was a trade that I didn't even really figure into that initial equation going in. So this possibly could have been a $400 day. But that was TCM. Like I said, we made 69 on that trade. Next trade was JPM. That I gotta be right stock that just wore us out. And I don't think this might be the second time that JPM has kind of done me wrong. But I can only blame myself. I can't blame the stock. This one here, we bought, like I said, 3 contracts. Should have been one buying 2 contracts, but we bought 3. So the first one we bought at 10.16. So we're getting in at right there. So we got in on this one. Nope, not a good trade. Look at that. We're running right into this resistance again. We're running right into this resistance again that caught us on the first trade. So we bought 1 contract there. Saw that we only had 1 contract and wanted to buy another contract, and we set the quantity to 2. What in the heck was you thinking, LMD? What were you thinking? So came right back in, bought two contracts pretty much at the same exact time, 10, 16, and 50. Got out of that trade at 1033. All three contracts. So let's see where we at on that. 1023. So we got out on this candle right here just as it was breaking that low of that candle, and we got stopped out for $48 because we had an extra candle in the deal. So that was another trade. Definitely was not a trade we should have been getting into. Again, you got resistance here that you got to break, and you have resistance there that you have to break. It's probably made a little bit of money. Had I looked over here to the left, one of my mentors in trading, Jared, with live traders, he always liked to say, think Beyonce to the left, to the left. If you look to the left here, you see that resistance. You see that trash. You see that stuff that you don't want to have to fight through. We fought through it and lost the battle and lost $48 on that trade. So JPM now has us down. What's that? $70? Bam, $70. I'm looking at it over there on TraderView trying to add it up, and it's right there for me in my face, $70. So that was JPM. Next trade that we took, another one of those I gotta be right trades. This was on Chevron. We went right back to Chevron. Another call play. 1017. So we're getting in on this candle right here. Getting in on a well extended move. If anything, we would have wanted to see that get pulled back all the way back down to pretty much half of that move. So we're getting in on that extended. And we got out at 1024. Let's see where 1024 is. We're getting out way down here. Look at that. Look at that. And we actually took a larger loss than our 1R. We should have been getting out as it broke this area. So look at that. Let's look at that distance from there to there to there. We're supposed to have been getting out at right there. We took this stop. That was a $42 loss coming all the way down to there. Right there would have been our 1R, which is what we should have been getting out at our 1R and keeping it moving. So we cost ourselves a few dollars on this trade by not getting out where we should have been stopped out at. So again, that's adding to the what I say was the potential on why it should have been a better day than it was. And we still had a good day. But that was Chevron. Let's see, where was the high of the day at on this one? Okay, so it finished fairly decent. I'm thinking that this was going to be the high, but we was pretty close to the high. But yeah, this one, not a good trade. Not a good trade. Definitely extended. Definitely extended. No real pullback. There was no real area in there to get in the trade. If you look at any of the charts, you look at the 5-minute, you look at the 15-minute. Only one that's really showing you is the 1-minute, and I don't trade off the 1-minute really, but could have got in right there on that breakout. Could have got in right there on that pullback, but the only thing is you got that top and tail, so you know that's going to kind of act as resistance. And if you look, you see that it's pretty much acting as resistance. So it was only really one area to get in right there. It opened, dipped down, pulled back, held this area of support, kind of made a nice little flat top there to break out on. Get in right there on the breakout, Kind of ride it up to maybe right here. Get out before the pullback, take your profits and move. But again, nope, we didn't do it. We lost some money on it, but we kept trading. We didn't let that discourage us. So the next trade that we got in, NVDA again. First one we made $1 on, so we was able to pay our commissions. This one we got in at 10.18. Let's see where we at. Bam, that's 10.18. Nope. Look what you got to the left over there, as Beyonce would like to say. You got trash. We got out of this one at 10.20. So we was in this one 2 minutes. Got out on that candle. We got out right as it was coming back down, right as we saw this trash right here. But we still made $20 on the trade. So it didn't cost us any money, but at the same time, not a trade that you want to take. As Mr. Live Trader likes to say, sometimes you can get over on the market, but the market will want its money back eventually. But we did get $20 out the market on that trade. That gave us our $21 on that contract for the day on 2 trades. So, keeping it moving, keeping the flow going. We got into TSM. TSM is what we traded the rest of the day. This was another call. And you will see eventually we flip-flopped on TSM. Said, TSM, you didn't pay us good on calls. We're going to flip, but we still was trading calls at this point. Got in at 10.20. Let's see where we at. Booyah, 10.20. Again, we riding this good wave. Let me see. Let's see if I can kind of stretch that out to lay it flat, but it ain't really wanting. There we go. That flattened it out a little bit. So it wasn't as high. So we got in right there, 10.20. We played this one for 30 minutes. Got out at 10.30 on the number. So we were getting out right there. Look at that, just as it was rolling. This one here, we bought 1 contract and we made $25. Had that been the 2 contracts that we should have been buying, we would have made 2-to-1 on our money for having 2 contracts. But still not a bad trade. We paid $231 per contract, so $231. 10 minutes, made 25 bucks off of it. Decent trade. And let's see what our next trade was. Next trade, guess what? I already told you what it was going to be. TSM. And once we hit this point, we never looked back. We started playing puts. So we took 2 puts. We got in this one at 10.37. And if you actually, I have some bonus footage at the back of this once we're done reviewing, where I was actually doing my watch list. And I think in that video I said that I was playing this for calls today. But guess what paid me today? Puts on this same one. So sometimes you have to take what the market is kind of giving you. But we got out of, I won't say got out, we got in this one at 10.37. 2 contracts. First contract we sold at 10.46. So let's see, we sold it here as it came down and hit the VWAP. Next contract we sold at 10.47. So that would have been in that contract. We sold this contract for $10 less than we sold right here. When this came down and tested this VWAP, I should have been out of both of them contracts. I should have been out of both of those, knowing that we don't like to play pullbacks and knowing that this is going to act as support to bring this back up or resistance to bust it down. So Took a $10 hit on that one, on that second contract, and we made $40 on that trade. $40. So had we got out of both of those contracts, knowing we were kept coming up on this area, we would have hit our 2-to-1, which is what we like to hit. But that was a green trade. Next trade that we took, oh, I hate it. I hate it. I hate it. TSM again. But guess what? I bought a call. I bought a freaking call. I got this trade at 1106. So let's see where we're at. We have let this thing come all the way back up. And we bought this at 1106. We bought this right in this candle. Right as it was breaking this area. We would have had our stop set right here. And we would have been playing this to go down. But again, we bought a call. Calls go this way. That went that way. And we got stopped out at 1109. We got stopped out down here. Had this been a call play, first of all, we wouldn't have got it on this candle because look at that wicked bottoming tail. It already broke where our stop would have been at. Because if we were playing this as a call, playing it to go this way, so you don't get in the trade if your candle has already broke where your stop is going to be at, or you stop down here if you're trying to give it a little extra room. But no, you don't do that. And you got resistance, and even though we put this on here a little later, you got resistance right there with that trend line. So this trade here cost us $69. Let me pull up Trader View real quick. In Trader View, I'll put my notes in there. Usually I'll come through. I do this after the fact. Just kind of notes to myself, the time frame, what chart I was buying it on. What was the strategy? Was it a 3-bar play? Was it a buy setup? Was it a sell setup? Was it a breakout? Was it a valid trade? Yes or no? What my P&L was. But you see, I had to put my notes in there on this one. This was supposed to be a put play. Ugh. $69 or $64. $64. Not paying attention. We had been playing calls, and then we had our puts, and we clicked the call side, and we bought the doggone call. So cost us $64. Again, we can drown in our sorrows, or we can pick ourselves up by the bootstraps and keep it moving. I'm going to pick myself up by my bootstraps and keep it moving. So, came right on back to TSM. That's why I say we traded this one all the way out. This one here we got in at 11.11. So let's see. We got in right there. And we got out of this one at 12 o'clock. We rode this one halfway decent. 12 o'clock. We got out right there as it was testing that VWAP again. We were not going to get caught. Wasn't going to get caught again like we did on the last one. We took 2 contracts. We sold both contracts. Look what happens. It breaks the VWAP. The market is a crazy thing. We held it. We held it back here on this one. It tested it and didn't even budge below it. In turn, cost us $10. This one, we sell it as it's coming to it. It peekaboos down 50 cents. That's an extra 50 cents on 2 contracts. That probably was 25 delta. So on 2 contracts, you split it in half. It's $12.50. You get right back to the 25. That's the rest of our money right there. We made $30 on this trade. That move was the other $20 to $25 that we needed. But we didn't want to take a chance. I'm not mad at it. Green trade. Stuck to my guns and my system of saying if it tests that VWAP, get out of it. And that's what we did. Looking at this, actually, this candle here, no real appreciable volume, but look at that next candle. That next one had a ton of volume in it. That would have told me that it still got room to go a little bit more because you got a bunch of sellers in there. But made $30 on the trade and we kept it pushing. And then we get to our final trade of the day back at TSM. We got these at 11.25. So we took these when it came back up and tested. Came back up, nice little pullback, broke that area, and we bought the two there. Had our stop set up in this area here. Came close to stopping us out, I'm sure, but it never did, which was good because we made good money on these. Expected to make a little bit more. I expected a little more out of this because I thought it would have broke some key areas of resistance, but it didn't. We rode these out pretty much to the end of the day. Didn't want to hold on to them overnight, which was a good thing. First one we got out of 1039, or I'm sorry, 1539. So we got out of it. Right here is this testing this little area here. That one there, we got 52 and 5. So let's say 55 and 5. Made about $46 on that one contract. And then we sold the last one at 1551. Right here as it was kind of pulling back up. And as you can see, that was a good exit point right there because it ended up closing back up. So that one there we sold and we made $60 on. So we made 107 on those last two contracts of the day. So overall, like I said, a good day. Somewhat disciplined trades. We did take a few trades that as we sit back and we review them, we kind of see the errors in our ways. Get the cam back on there. We kind of see the errors in our ways. So like I said, we do these reviews to kind of learn things not to do, kind of learn what works. We see breakouts works. We see buy setups work when you get a nice pullback. We see that nice color changes work. You get a red candle, you get a green one that comes below it, and then the next one break above it. That green one just gives you a little extra confirmation. So we definitely see what works. And like I say, you definitely see what doesn't work because you see that one in your pockets. You see that one when it costs you. But overall, good day. Like I said, I wasn't expecting much out of it when I was building my watch list this morning, especially on the call side. I think it was only 3 stocks that was on my option scan list that were trading positive gains. Everything else on the list was trading negative. So like I said, it was a little touch and go. TSM, this was one that on the watch list I wasn't planning to trade puts on it, but just looking at the chart and seeing how it was moving, let me go over here to here. So looking at the 15-minute, that was a hefty move to not have a pullback. So we were expecting a pullback, and then based on what the market was doing at the same time, the market was kind of I say flushing, but not really flushing. It just was in a downtrend. So um, just seeing that that was kind of in a downtrend, we said, okay, let's start playing puts. And yeah, worked out. Made what's that, 137? Um, and on that one TSM trade, yeah, TSM. This one always get me because a lot of times I'll say TCM, but TSM. The one that the call was purchased on, we lost 64. But just think if that was a put play, um, would have at least made our target. So that was $110 swing right there. So definitely was a good day. Definitely was a good day. It's a long weekend. We won't be trading on Monday. So I'll be going through withdrawals. I'm one of them ones that on the weekends, I'm looking forward to Monday coming back because I'm looking forward to getting back in the market. But yeah, it was a good day. I'm gonna go ahead pull up Trader View real quick, and then we're gonna get out of here. Like I said, I do have some bonus footage at the end. Um, so if you're stuck around this far, please stick around, catch that bonus footage out. But let's just take a look, see what we're looking like right now on the. Let's see what we did for the week first. So we'll filter that out on the week. We'll come here to detailed, and up 874 on the week. Not a bad week for a small account. Winning trades 60%, losing trades 37, so we 60-40. Average winning trade 48, average losing trade 26. How about that? Just about at our 2-to-1, just about at our 1R loss. We'll come over here, largest gain 202, largest loss today. We took that $64 hit. I wish I could scratch that, but we can't because that's an error on our part. What else here is pretty interesting that we can go over? Average hold time on winning trades is an hour. I'm sure that those last two contracts today increased that number. Hold time on losing trades $7. You definitely want to cut your losses quick. Scratch trades $20 or 20 minutes. I'm sorry. So those there are trades that you kind of watch them go up and then they come back and basically stop you out at flat. Max 3 consecutive losses, max 6 consecutive wins. I wish this here worked for options, but it doesn't. This here provides good information when you trade in stocks. It lets you know what your maximum profit was in trades, so your unrealized gains. So you might be up $100 on a trade and then it pulls back, stops you out, and you only make 50 bucks off of it. So that's good information right there to know. But yep, like I said, we're up 864 on the week. Let's see what we are up on the year. Up 1,500 on the year. So we did just about 700, 800 bucks both weeks. We'll look at our winning trades, just about 60-40 again. Average win right there, still at about 48. Average loss, we kind of kicked that up 10 more dollars. We want to continually see that at about 25 right now. My thought is maybe about April. Maybe about April, we will kick up our risk level to where we're risking more than that 25. But I think 3 months at that risk level is a fairly good level. Largest gain 475, nice. Largest loss 237, ouch. Ouch. But I'm gonna go ahead and cut this short. I think I'll do a video kind of reviewing what we've done so far for the month. So I'm gonna cut this short. Again, like I said, right after this, we're gonna have some bonus footage. So when I say peace, I don't really mean peace. Go ahead and stick around, catch that bonus footage. But peace. See you next time. Let's see where we're at on the daily. Gapping down right here to this area of support, which is right at the 50-day. So this one could have a chance to kind of bounce back today, especially after that decent sized gap down. We'll take a look and see what kind of contracts are out there. I do like this one here over this one. 14,000 on the open interest, 21 cents on the delta, 7-cent spread. So I'll add that to the call side. And if it does break that area, it only really has room there. So we really are just going to look for this on the call side. If we don't get a bounce, we won't be messing with that one. Just sitting here kind of monitoring, came back to the trade station, monitoring the last two puts that we have on TSM. We did take a few trades on this. One of the trades was it was a trade I wanted to take, but it was a trade where I bought a call instead of a put. And within the review, we'll see that when I go over it. But just want to do a quick analysis on this TSM. We see that it took off real nice off the open. We did find the area to try to get in it and make some money off of a call. Also got in it and made some money off some puts as well. But just going here looking, we can see these areas of support and resistance. And I actually was going to get out of this trade a little while ago when it started to kind of make this move right here. I didn't have this trend line right here on the chart that's at the diagonal. I ended up going over to my hourly charts. These are the charts that I use when I'm doing my pre-market reviews. But I came over here and looked at the hourly chart, and if you see from this point here, it made a nice wedge, kind of nice little descending wedge, and that there made me stay in this trade. I was going to just close those two positions, take a quick I think it was up just 1 R, so it was basically up $25 up in here somewhere. And I said, no, let me go ahead and hold on to this thing, because like I say, you see it's basically just trading right here. Now the thing is, where am I going to want to get out once it breaks that area? So right here would probably be a good point for it to kind of dip down to. So you do see I have one of my contracts sitting right there, and actually I didn't put that one there based on that. I put that there based on something that I saw on my regular charts that I'm looking at. But looking at this right here, that's about where I would think that first move will go to. So let's go back here, and as you can see, this is what the active trader looks like when I'm actually in a trade. So you see where we got in at. So we got in at 105. Last contract sold was at $140, which this here tells me how much I'm up on the trade. That's on both contracts. So I'm in 2 contracts, and this is showing me where I'm at. These are the sellers that are lining up to sell it. These are the buyers. And as you can see, the stock must be going down because it's headed up. And then if we scroll up, this is our first contract here. Because I'm sitting at my desk, I'm going to kind of monitor that, and if I see it making a nice move, I'll probably pull that up to try to get a little bit more profit off of it. And then we have our other contract just up a little bit higher. But I figured since I was sitting here at my desk, I'd go ahead and show my actual active trader. And I'm gonna go ahead and move this up to about right here right now. If it does pull back and I want to just get out of that contract, I'll pull it back down, probably somewhere in between the spread. But as we can see, we were just sitting right there, and this thing is popping. So, and one thing I will show also is just the potential that option playing has. So this stock opened right here, and it made this move, came back and just been kind of meandering along. But if it can break that area, it's a good chance that it'll come to here. That would be optimum. That's what we want to see happen. And then if it broke that level, if that did indeed act as an area of resistance going down, since we're playing a put, if it was able to fill this entire area, so from where it's at now down to here, let's scroll up and we'll see what the profit potential is if it covered all of what it did today. So we're holding on to 2 contracts right now, and if we were crazy and bold enough to try to hold those contracts and see if this stock pulled all the way back, those 2 contracts have the potential to make $590. That's how much money is in that move right there. And let's see, what did I say we paid? So we paid $1.05 per contract. So we have $200 invested in this trade with the potential to make $590 if we held on to it and tried to see if it's going to ride all the way down. At this point, I will say that is not in my plans. I'm going to try to manage this first contract. Hopefully it will break this area of resistance. Manage this contract within that area, and then I would hold this contract to see what it does. But again, that's all predicated on it breaking this area. But right now, last sell of a contract was at 151, and within the spreads, we would say middle of the spreads are about right there. So we're still looking good on this trade, kind of just babysitting it. It's a slow day. I'll bring that back up. We'll see. Let's see what it does. But look at the number of sellers that have came out to play as opposed to the number of buyers. And I will get out of this contract right around, get out right here about the 4-to-1 if this pulls back, just to go ahead and secure that profit. We got what, 20 minutes left to the market. Let's see. See, I caught that just a hair later than I really wanted to. Would have liked to got out right at the 4-to-1, right at the 4-to-1 area. And like I said, getting real thin on the buyer side. We need to see some. Oh, look at that! Look at that! I got caught slipping. Got caught slipping. I had my order sitting there, and look at that thing move. Got caught. caught slipping. So I'm gonna go ahead and let's see where we at on that one. So we sold that order. Sold that order, I think, at about 40 bucks. Yeah, maybe about 46, 48 bucks. What I'll do real quick, I'll show you how I import my my trades over into TraderView, and we'll see what we got out of that trade. So give me 1 sec. Okay, so in order to do that, we go up here to monitor, we go to export file, we'll save that as the same one we've kind of been exporting all day. So we'll save that, replace it, yes. I'm gonna switch this back over to the chart right now. Come down here, open up our web page, go to import trades, come here to browse, already at the folder. We'll click that file, and actually before I do that, I'm gonna go to my dashboard. So right now our closed P&L on the day is 115. Definitely should have been more than that. Look at that. On one trade we made 100 bucks. Other trade we made 69. So that right there, that's 170 just on those 2 trades. But we'll come back here to import trades. We'll go to browse, click that file, we'll upload it. Now it's been uploaded, we'll go back to the dashboard, and we're at 162. Let's see, we got out of that trade at 47, so we're still in it, and we still have that last contract at the time that we imported was at $47. So we'll go back here and here and look at it. It's breaking that area. So we'll still kind of manage this out. We got probably close this contract out in about 10 minutes. Just so we don't get caught holding it into the weekend. So that's what we're going to do with it. Like I said, we will go ahead and get out of this contract here shortly. I don't think I want to hold this one over the weekend. This area here held up strong, held up a lot stronger than I thought it would have. Let's look at the full chart. Definitely would have expected that to get down. I was hoping that that could have got down to that level there. What are we looking at? 1547. So we got about 13 minutes left in the market. Let's see if we get a lot of people trying to sell their orders. Kind of dry this thing down a little bit more. We do see got more buyers than we do sellers again. Look at those sellers coming down there to the buyers right now, though, trying to get rid of their contracts. Interesting fight. Who are trying to get rid of their contracts more? People trying to buy more than people are trying to sell. End of the day, we finally break this area we've been trying to hold up on all day. 348. How much longer do we want to hold it? But look at the not much price action on the chart. but look at the spreads are coming up, moving up, almost like they're anticipating a move down. We'll go ahead and set this at a whole number. Look at somebody selling, getting out of their contract right there. I think we will get one good push, especially if this 5 minute breaks that candle. I will be ready to drag this about right here in a minute. Try to get out of that on a if this doesn't come up to us. Let's see if we can. Okay, there we go. What did I say? Right about where I want it to be at. It's coming up. We'll go ahead and just let this, if this does move up, which look at the stock. If that does move up and these sellers go ahead and run past us, we will go ahead and let this get us out of the order. Look at the spread now. Look at that spread. What are we looking at? 10 minutes to close. Look at where this candle is fighting at, right about the same candle as yesterday. What are we, 10 minutes off, 10 bucks off of our number. $3.50. Let's see if we can get a bite. No bite. And look at those other sellers come down there with us. Brought more sellers with us. It's funny how that works. All right, we are out of that last contract. And what we will do here is we'll go ahead and export that, and that'll be our last trade of the day. We'll export that over. Come back here. 162. We will browse. Boom. Boom. And we are finishing the day up 222. Look at that. Look at that. So we closed those 4 contracts out. Actually, those 2 contracts. Yep, those were the 2 contracts. So the 4 contracts we closed out for 137. This was the bad trade that we took. That was the bad trade. These were calls when they should have been puts. Look where we bought those at. We bought them. It's showing you here, but we bought that right there. Look at that money. We would have got out of this either on this move or possibly this move. Instead, we noticed that we were in it on the wrong side and took a nice hefty stop loss. So that was 60 bucks. We could have been up an additional actually I won't even say an additional 260. Let's just say that went the other way, and that was a $50 gain. We could have been up $300 on the day. And look at that. Look at my notes. This was supposed to be a put play. Ugh. But